you? Anything you want.
Dollar as world reserve currency coming to an end. Rory Hall. If your country is ranked in the top 20 of 190 nations in economic strength, are you an emerging market or have you emerged? Personally, I wouldn't call a top 20 nation emerging. They have arrived. India 6th, Brazil 8th, Russia 12th and Turkey 17th are all in the headlines as struggling with monetary issues for one reason or another and constantly referenced as an emerging market. Why? It could be argued that China, the second largest economy in the world, is struggling with monetary issues as well. This could have profound effects on the global economy, manufacturing and other areas that connect the global markets. If one has been paying attention to the unfolding emerging market crisis, then you already know we have some serious problems going on in the underbelly of the global economy. The size of the emerging markets' GDP becomes less important when they begin having problems in bunches. If you have a single nation get themselves into monetary trouble, it's not a big deal. However, when you have Brazil, Argentina, Venezuela, Turkey, India, South Africa and China struggling to one degree or another, this has the potential to create a firestorm of economic problems. This is to say nothing of the potential impact the coming sanctions against Iran and Russia will have on the global economy. We have documented, over the past several years, how China is on again, off again acquiring American debt, for example treasuries. It is also well known that China has built a parallel financial system to the current global financial system. Banks, electronic settlements, global trade mechanisms, gold settlement markets and all the other necessary support to step away from the current system entirely. Russia has, to a lesser degree, done the exact same thing. Russia's financial infrastructure is not as robust as China's, but she has worked diligently to protect herself from a weaponized monetary system created by the Federal Reserve and Western banking systems. The current system is coming to an end, we believe, within the next decade, and now we find that Jim Rogers is saying the same thing. In the next few years the American dollar is going to lose its position as the world's reserve currency and the world's medium of exchange, Rogers said, adding that the world has always moved away from dominant currencies in the past as situations changed. He said that the British pound once used to be the dominant currency in the world, and before that there were other dominant currencies like the Spanish peseta, the French franc, and the Dutch guilder. They all had that position at one time or another, but then went to excess and are not that sound anymore. They lost their position. People don't like Washington's power, so they are moving away and finding ways to get away from the dollar. It has happened throughout history. It happened to the pound sterling. You know the rest of that story, Rogers said, adding there's no need to worry because it's not a disaster. Source: now we learn that Russia and China are taking another step away from the Federal Reserve note, US dollar debt-based system, and will begin using more yuan and ruble to settle trade between themselves. Some of you are thinking, who cares, it's China and Russia. Well, you should care, as these are the number 2 and number 12 economies in the world, and Russia is one of the world's largest suppliers of oil. Some would argue Russia has the largest oil reserves in the world. Not fracked oil, but actual oil that's easily obtained and high quality. Vladivostok, Russia. Russian President Vladimir Putin on Tuesday, September 11, said that Moscow and Beijing plan to use their own national currencies more often in trade deals as Russia's relations with the West deteriorate. The Russian and Chinese sides confirmed their interest in using national currencies more actively in reciprocal payments, Putin told journalists during a press briefing with Chinese leader Xi Jinping after talks at an economic forum in the far eastern Russian city of Vladivostok. Putin said this would increase the stability of banks servicing of export and import operations while there are ongoing risks on global markets. Source: this is on top of all the other statements, agreements and monetary infrastructure that have been instituted to displace the Federal Reserve note, US dollar as world reserve currency. I'm not sure how much more is left for these two countries to build out and change before they are 100% out of using the world reserve currency. Yes, I understand China still has more than $1 trillion Federal Reserve notes on her balance sheet. However, if they are just sitting there, the U.S. Treasury has to pay the interest due each month, while this $1 trillion is completely dormant. China uses the interest payments to build out another nuclear power plant, water system, solar farm, or any other of 1,000 ways to strengthen her economy, while the dormant Federal Reserve notes are doing nothing for U.S. economy. The real question is, what will happen when China begins sending these dormant funds back to their owner? Gold will fight back dollar for haven status, Sprott says. Don't write off gold in the battle of the havens. Bullion has lost out in a paradigm shift where the metal's no longer viewed as the traditional refuge when investors are in a risk-off mood, but that won't last, according to Rick Rule, Chief Executive Officer of Sprott U.S. Holdings Incorporated. Investors are favoring U.S. Treasuries, and that's seen the dollar get stronger, Rule said in an interview from Vancouver Wednesday. But the greenback's strength is relative, not absolute, and the overwhelming faith that the global saver has placed in the U.S. currency is probably partly misplaced, he said. It used to be that investors looked much more broadly at a basket of currencies when valuing gold, said Rule, 65, who's been involved in the market for 4 decades. It seems now that the dollar really has obtained hegemony, and the consequence of that is that the fight really does seem to be between the dollar and gold seems to be losing. I don't think that continues, but I can't tell you when that changes. Bullion has slumped to the lowest since January 2017 and is set for a 5th month of losses as investors flee to the dollar amid trade tensions, emerging market turmoil, and a Turkish financial crisis. A hawkish Federal Reserve and buoyant U.S. equities have also boosted the greenback, now near a 14-month high. The world, to some degree, has been quite used to bad news, Richard Hayes, the Chief Executive Officer of Australia's Perth Mint. If you were to go back 7 or 8 years, any one of the trade wars, or what's happening in the Middle East, or China, Brexit, the rise of the far left and far right, any one of those events would have been enough to make a fairly significant impact on volatility of prices of precious metals. Simona Gambarini, an economist at Capital Economics Limited, cited other periods of turmoil when gold failed to attract haven demand. During the last global financial crisis, she said, the price of the metal started to rally only toward the end of 2008. Gold has not tended to behave like a safe haven asset in the past during times of stress when the dollar has appreciated at the same time, Gambarini said in a note to clients emailed on August 14. During the Asian crisis, investors fleeing developing countries did not seek the safety of gold either. Still, Hayes remained optimistic of gold's potential for a rebound, citing rising global debt. Perth Mint Physical Gold ETF, the first with bullion holdings guaranteed by a sovereign entity, started trading in New York on Wednesday. Gold insurance U.S. government debt has more than tripled since 2007, while tax cuts and new federal spending have fueled a budget deficit that the Congressional Budget Office predicts will reach $1 trillion in 2020. With the Federal Reserve winding down debt holdings, U.S. note and bond sales have risen to levels last seen in the aftermath of the recession that ended in 2009. Rule holds physical gold in his personal portfolio as a form of insurance. He still sees gold reaching $1,400 an ounce, a level he forecast earlier this year, but refrained from giving a time frame. Spot gold rose 0.4% to $1,179 an ounce at 2:14 p.m. on Friday in New York.